This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The price of Iranian crude oil sold to China has risen to the highest in years as fresh U.S. sanctions have tightened shipping capacity and driven up logistics costs, trade sources and analysts said. Rising prices for Iranian oil as well as Russian crude are raising costs for independent Chinese refiners that account for about a fifth of demand at the world's top crude importer, underscoring challenges ahead as the Trump administration is expected to ramp up pressure on Iran. Some of the refiners are switching to supplies not under sanction restrictions, including from the Middle East and West Africa, to meet seasonal winter and pre-Lunar New Year demand, traders said.
Oil prices climbed about 2% on Friday to settle at a three-week high, on expectations that additional sanctions on Russia and Iran could tighten supplies and that lower interest rates in Europe and the US could boost fuel demand. Brent futures rose $1.08, or 1.5%, to settle at $74.49 a barrel. U.S. West Texas Intermediate, WTI, crude rose $1.27, or 1.8%, to settle at $71.29. That was Brent's highest close since November 22 and put the contract up 5% for the week. WTI posted a 6% gain for the week and closed at its highest since November 7.
Moving on to the top news in the energy sector.
The United Arab Emirates plans to reduce oil shipments early next year, amid the OPEC Plus group's push to seek stronger discipline in meeting production targets, Bloomberg News reported on Friday. The Abu Dhabi National Oil Co., ADNOC, has cut allocation of crude oil cargoes for some customers in Asia, reducing volumes by up to 230,000 barrels per day across various crude grades, the report said, citing companies with contracts to receive the shipments.
China's refined oil consumption peaked in 2023 at 399 million metric tons, 7.98 million barrels per day, and is expected to fall 1.3% to 394 million tons in 2024, CNPC Economics and Technology Research Institute said on Friday. As a result, crude oil imports are expected to fall to 544 million tons this year, according to a presentation by the research arm of China's largest oil producer, although the world's top importer still accounts for a quarter of global imports. CNPC's forecast underscores expectations that China's crude oil imports are on track to peak next year as transport fuel demand begins to decline for the world's top crude buyer, ending the country's decades-long run as the dominant driver of expanding oil consumption. Next, we have the top news in metal markets. Peru's copper production in October fell 1.4% compared to the same month last year due to less output from two of the country's largest mines, official data showed on Friday. October copper production totaled 236,797 metric tons. The Andean country is the world's number 3 supplier of the key industrial metal. The data, from the Energy and Mining Ministry, showed that copper production from the Cerro Verde mine controlled by Freeport-McMoRan, and the Antamina mine run jointly by Glencore and BHP, fell in the month by 6.6% and 22.2%, respectively.
Gold prices fell on Friday after bullion hit a more than 5-week high in the previous session and as the US dollar gained, but prices were on track for a weekly rise on expectations of a Federal Reserve rate cut next week. Spot gold was down 1.1% at $2,652.29 per ounce at 1:43 p.m. Eastern Time, 18:43 GMT, as the US dollar was steady at its highest in more than 2 weeks. Bullion hit its highest since November 6 on Thursday, and has risen over 0.8% so far for the week. US gold futures settled 1.2% lower at $2,675.80.
We will now look at the top news in the agricultural sector.
Russian wheat supplies to Syria have been suspended because of uncertainty about the new government and payment delays, Russian and Syrian sources said on Friday, while 2 vessels carrying Russian wheat for Syria did not reach their destinations. Russia, the world's largest wheat exporter, was a staunch supporter of Bashar al-Assad and supplied wheat to Syria through complex financial and logistical arrangements, circumventing Western sanctions imposed on both Syria and Russia. A Russian source close to the government told Reuters supplies to Syria have been suspended because exporters are concerned by uncertainty over who will manage wheat imports on the Syrian side following the change of power in Damascus.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.